Good morning, ladies and gentlemen. I am Ivan Rodrigues, and it gives me great pleasure to welcome all of you today. As the tsunami of disruptions rising from the global economic slowdown and the COVID-19 pandemic inundated global economies, the Times of India Group has taken the responsibility of rewiring our understanding of a world in flux through the India Leadership Series, a series of interactions with stalwarts across industries spanning over 60 days in collaboration with ServiceNow. Today's banking roundtable, titled Marching into the Next Decade, Complexity and the Arcs of Time in Banking, will focus on immediate challenges, opportunities, and decisions required to steer the sector out of choppy waters with an aim to revitalize one of the greatest economies in the world. Doyens from the sector will deliberate not just on what it will take to navigate through this crisis, but also shed light on what companies in this sector will need to do to emerge victorious in a new world order. It is our belief that the words of wisdom from the respected members of this roundtable will help many peers to rethink and rework their strategy to sail through these challenging times. And so, without further ado, it is an honor and privilege for me to welcome the esteemed members of this power-packed roundtable. Elisha Harrington, Senior Director and Chief Innovation Officer at ServiceNow. J. Venkatramu, Managing Director and Chief Executive Officer at India Post Payments Bank. K. Paul Thomas, Managing Director and Chief Executive Officer at ISAF Small Finance Bank. M.S. Mahableshwara, Managing Director and Chief Executive Officer at Karnataka Bank. Nitin Chugh, Managing Director and Chief Executive Officer at Ujjivan Small Finance Bank. And P.N. Vasudevan, Managing Director and Chief Executive Officer at Equitas Small Finance Bank. This roundtable will be moderated by Himanshu Vats, Consulting Editor at the Economic Times. Himanshu, over to you.
Thanks, Ivan. Thanks for the nice introduction. I'm delighted to welcome this distinguished panel on a very, very important topic. The banking sector is undergoing transformative changes. In recent years, millions of people who were outside India's formal financial system have been given access to banking. The sector is, in a sense, the backbone of the economy and the most reliable indicator of the pulse of the economy, the corporate sector, and also what's happening in small businesses. As a financial journalist for so many years, I've deeply valued the information that flows out of bankers, because unlike other specialists who can just give an opinion, a banker does not give armchair views. He puts his money where his mouth is. And I think that's something that makes the banking community so special for all of us, especially when you're dealing with a rocky economy as of now. I say rocky economy because, for the last year and a half, we've been through some very troubled times. The banking sector has had to deal with it, but it's done very well. I think there were times one could not find basic household groceries, but one could find money in the ATM. So I think all of you do deserve an applause for that, and we are delighted to have you. Can I start with Mr. Venkatramu? How was this experience of dealing with COVID and disruptive changes, keeping your staff going, keeping the system going? How did you deal with it?
Yeah, I think the experience has. Am I audible?
Yeah.
No, the experience has been mixed, and again, it's been different between first wave and second wave. While first wave has thrown a lot of opportunities, and in fact, we've seen picking of our businesses as far as first wave is concerned, wherein not only the transactions have improved and increased substantially, but also the number of accounts which opened. And this is largely due to the fact that the entire BC infra, particularly the private BC operators, not being able to function because of the lockdown, that actually give an opportunity for the postal counters to cater to the customer demand. And coming to the second wave, yes, it has actually largely disrupted our functioning on the ground. And also with majority of the people getting affected because of COVID, there was slight slowdown. But nevertheless, when you look at the rural part of the country, yes, it definitely has thrown open certain opportunities, and also it has changed. More importantly, changed the behavior and the way people bank with. Like for instance, people were not ready to really use their biometric as an authentication means for doing banking transactions, because of the COVID problems. So those are some of the challenges, but largely, yes, it's a mixed bag, I should say.
Okay, yeah, it's been a mixed experience. One of the things that we have seen really expand in the last year and a half is the use of digital technology, use of online banking, using of mobile phones to make payment. And I see this has reached the lower stratum of society also. It's very heartening to see a small kiosk, somebody saying, okay, you can pay me, this is my QR code. And I've seen that with carts selling juice. What's been your experience dealing with technology? If I can turn to Nitin Chugh, how transformative are these changes? What does it mean for the banking system?
Well, Ivanshu, I think a lot of these changes are permanent and they are here to stay now. Most importantly, I believe, more than just the technology, the application of technology has been, really understood very well by everybody who's a stakeholder. So I don't want to dwell on, how we've reconfigured ourselves into Zoom meetings, etc. But that's like par for course now. But I think more importantly, the customer behavior has certainly shifted in a more permanent manner. We do expect very little of rollback happening this time around, unlike what we saw the last time around after demonetization. The second thing is that insights are becoming far more valuable now, in the sense that there is a greater need to understand the customer behavior and the changed customer behavior. People who have really been impacted during the pandemic, both the first and the second wave. And therefore, greater use of data science, greater use of analytics, greater use of customer experience models. I think those are becoming far more valuable than ever before. And I think the last one is really about a good collaborative ecosystem of partnerships that has also taken shape and flourished in the last 1.5 years, because almost everybody has realized that they can't do everything on their own. And when everybody is going through a similar kind of a crisis, the magnitude is different. It is best to lean on each other and make sure that we come out of this together. And to that extent, technology-led partnerships, I think, have really flourished. And we have certainly benefited a lot. Our partners have benefited a lot, and we've been able to expand this in a very, very scaled up manner over the last 15 months or so. So I'll just stop at that, because technology is such a subject that you can keep going on and on.
Yeah. Mr. Mahabaleshwar, you have also been championing digitization. And only yesterday you were telling students that how they need to excel in technology if they want a career in banking. How important are these changes for the banking sector? And have you seen enough, or do you see much more happening in the future?
Correct. It would be more exciting, no doubt about it. And just to further build what Mr. Venkatramu and Mr. Nitin has just shared with you all. This COVID-19 period, entire banking sector was up and running. That was the most important thing, because we consider ourselves as the nerve center of the economy. And we ensured that there is adequate money flow in the society in the hands of the people. People management was the biggest task for all of us. And I should say that employer-employee relationships during this COVID-19 period has further strengthened, and it should, and that is the one biggest advantage for all of us. I had seen the more empathetic and emotional connection between the management as well as the people, that is the staff. And I had seen through my own eyes a concept of all for bank and bank for all. That type of rapport and empathetic relationship was built. In fact, in my own bank, around 20% of my staff were affected by COVID-19, and the death toll was less than 0.2%. Of course, it was mainly on account of timely medical attention ensured by the management, not only in my bank, but I should say entire banking industry, because I also sit on the management committee of the IBA. So all the banks in India, whether it is a small finance bank or national banks, private sector banks, all have rushed to rescue their employees. So they had given special hospitalization expenses, special COVID leave, and ex gratia were also distributed. Compassionate appointment to the next kith and kin of the family, if they are found eligible, that was given. And the most important thing is the vaccination drive that is being taken up by the banks, especially for the employees, because the people who are at the branch, they are getting connected with the society and they are more vulnerable for the COVID-19. So all of us have taken topmost priority for vaccination. In my bank, as of now, 85% of staff are already vaccinated. So, and we also introduced lot of flexible working hours, alternate day working, and WFH concept is also introduced effectively in the bank. From the customer's point of view, as you have rightly pointed out, the digital banking 24/7 that was ensured, internet banking, mobile banking, all these things were, I should say, were up and running in even the ATMs. In fact, making arrangement, cash replenishment was the biggest challenge. I should really appreciate the Reserve Bank of India, as well as the concerned state police department, in ensuring that the ATMs would never go dry. You had made an opening remarks about it, and a lot of coordinated effort was there. And we could see the banking sector managing the crisis in a very professional way. As far as your second point, that is the technology is concerned, Mr. Vance, yes, definitely the current century, not just a decade, it belongs to the technology. We all should understand that. In many forums, I have voiced this particular point because the first decade of the current century, it belonged to CBS, that is core banking solution, wherein we all practiced that customer is not just a branch customer, but he is a bank customer. Anywhere banking, anytime banking, all those things were done. But whereas in the second century, entire banking sector, they opened up to ADC, alternate delivery channels. So based on the CBS, we developed internet banking, mobile banking, POS, QR codes, all such things. But what is in store for us in the third decade of this particular century? If you look into the progress that the banking sector has made during the first and the second decade, it was all about customer transactions and liability portfolio management. I am one who believe that this third decade of the current century belongs to DLS, that is digital loan sanction. So this is the new mantra and the new step forward for almost all banks, because digital underwriting is going to change the landscape of Indian banking. So that is the biggest challenge that as a transformational leaders, we all CEOs have to face in preparing our respective banks.
Okay.
Yes, with that, I will hand it over to Mr. Vance to further take it up.
Yeah, thank you. You made some very interesting and important points. I think something we've seen in every office, the kind of bonding and facing the difficulty together between the top management and everybody else in the company, that really solidified the flexibility, the work from home. Can I turn to Mr. Vasudevan? What is the view from the, from a small finance bank perspective? We've seen The public has heard a lot about what the big guys are doing, the big borrowers, the big corporates. What about the small ones?
So, morning. The small finance bank actually has a double life, so to say. On the liability side, when we go out to raise money, we actually have to behave just like any other bank in the country, because the money is available with the middle and upper income category of the people. And they are all well banked. They are all very well banked. The bank service levels are very high, and all kinds of channels are available to the customers. So if we have to raise deposit, and we have to raise deposit, so we basically have to behave as good or better than any of the other universal banks when it comes to deposit raising. But when it comes to lending, as a small finance bank, we have a target of 75% private sector target given by RBI, which means that necessarily a large part of our loans are given to the very low income excluded segment in the population, where the digital penetration, digital footprints of the clients, etc., are practically not there. It's just not there. So the lending, as far as the lending part of it is concerned, we have to behave as the most traditional format of a lender, where we have to go out and sit with the customer, have a cup of chai with him, and have a dialogue. There's a lot of disturbance. Can I continue?
Yes,
Hello?
please. Yeah, please continue.
Yeah. So as a lender, we got to go and sit with the customer and have a cup of chai with him. And through a dialogue over a chai, we have to figure out whether he is credit worthy or not. Not by getting his, PAN card, or not by getting his IT returns or anything like that. They don't exist. So as a small finance bank, we have to have on one side the ability to behave like a very, very localized lender, being able to be extremely dynamic in terms of our credit assessment capabilities. And when it comes to liabilities, it's very different. We got to be as good or better than anybody in the market if we have to attract a customer to put his money with us rather than with any other bank. So I think that's the positioning of a small finance bank. So typically you would find, whether it is Equitas or anybody else, you would find that we are all making pretty strong strides on digitalization or digital banking from the liabilities perspective, whereas on the lending side we continue to be extremely traditional. So that's the way the small finance banks actually operate.
Okay. Paul Thomas, you have anything to add to that? Are you also as traditional?
Yeah, I endorse whatever the views said by Vasudevan. So the biggest challenge we've been facing is the digitization, because as of today, most of the low-income customers still they receive their payments as cash. So how do we convert this cash into digital format? So that is the biggest challenge we are facing. So we started the bank. So we opened a bank account for all of them, but we are using that only for disbursing loans. So for collections, for their repayments, it is still on cash. So that is one area we need to work on. Maybe going forward, the appointment of banking agents, banking correspondents at the last mile may solve that problem. That is our hope. But small finance bank in general, most of us been converted from an MFI perspective. So we still focus on the financial inclusion and the last mile service, the unserved and underserved communities of India. So on a social perspective, on an inclusion perspective, small finance banks play an important role in bridging the gap. So that's what I want to endorse.
Okay. So that's a interesting point. You still have people who want cash, although India's digital journey has been very, very good, and many people say that we are more digital than many of the developed countries also. And I think, Elisha, with your international perspective, can you put this in context, where India stands globally and what are the trends globally?
Absolutely. When it comes to, if we think of, the panelists have spoken about responsible lending, offering to underserved communities, driving and focusing on digitizing their processes. If we look inside the bank, taking irrespective of any jurisdiction around the world, financial institution really has, the goals in mind with the strong infrastructure, recognition in the market for what they do really well. So at the start of the panel, I was talking about partnerships. I want to just double click on this area a little bit further when it comes to the way we're seeing our customers from ServiceNow, but also, many large financial institutions around the world. They may be partnering with, say, other fintechs or technology providers that have a very niche area of expertise that they're focused on. If you look at the power of the financial institution, what do they have? They have the brand, the recognition, the very large customer base, quite comprehensive data, robust infrastructure, the risk management experience and the ability to understand their customer base. And you look at what the fintechs have, they have the culture of innovation, a little bit more nimble at times, the agility and various, platform expertise and technology capabilities, and shared together in partnerships, you can really scale innovative solutions, looking at deeper, data-driven analytics, and also enhance, risk mitigation across the board. So we're seeing a lot of co-design of unique products in the market where, the traditional financial institutions coming together with fintechs. If we focus a little bit more on, and some of the use cases, have been across, lending, even outside of India, the UK, and the US, a lot around international the payments and settlements, reducing counterparty credit risk, looking at new use cases in trade processing. And really all of this sets a foundation for how the customer base is being able to be serviced in a way that is, personalized. So if I focus just on that as a last point there, when we think about personalization for any customer base, the bank needs to understand that the customers want to, act on the services, be able to make transaction, have reliability when it comes to the services that the bank provide, but also in a personalized manner. So really now the focus for banks is how they can be more proactive around looking at their data that I just touched on earlier, and being able to look at the contextual information and say, well, if there is opportunity in the market, lower interest rate or various indicators, how can the bank look at external factors, other factors, start to bring that inside the bank, all of that intelligence, and start to look at new markets that they can tackle and new financial instruments that they can generate as well. So I really like to talk about lots of growth agenda and how, banks can pivot and make those strategic decision-making internally using the data and other capabilities. That's all. Back to you.
Thanks, Alicia. I think the panelists so far have made some very important points about not just digitalization, also about financial inclusion. And I think I'd like to see more specific views on financial inclusion. And I think Mr. Venkatramu, you are uniquely placed, so are some others, but you have such a vast network and you reach out to the common man through your various branches all over India. So what do you think has been the progress in financial inclusion so far, and what's the way to go? Please unmute yourself.
Yeah, I was saying that, thanks to the Jandan movement, which started 6 years back, I think that has opened up a lot of customers, opening up of bank account. And parallel to that is expansion of the BC network. Also, to a large extent, address the problem of accessibility. And coming to the development of technology, the JAM penalty, where we've seen inclusion of both Aadhaar and mobile, and development of products like Aadhaar-enabled payment system and Aadhaar-based account opening has actually added to the scale. So if you ask me, I think to a large extent, the accessibility towards the service, towards the banking services has improved phenomenally. and more so with players like us coming to the picture, the certainty and the proximity towards banking services has tremendously increased. So if you look at our network, we typically serve around 4 to 5 villages. I mean, each of our post office serve around 4 to 5 villages. So that way, the availability of banking services and for the customer, the cost of availing the transaction has come down substantially. I mean, I can tell you scores of such success stories, where people were spending, more than 100 rupees just to go and withdraw their pension amount. Now with the proximity part, it has reduced to nil. So that's the kind of, advantages, at least for some of the customer segments that we've seen, coming to. But having said that, yes, I think it's just a beginning as far as the inclusion is concerned. It's more about, adding services and particularly the credit part. I think the accessibility to credit services, which is very important for this segment of customers, is what is the next stage of financial inclusion. And that's where, probably players like us will have to add more and more services so that it becomes, much more meaningful and inclusive for the customer segment. That apart, we've also seen the growth of digital financial services, and digitally enabled account opening has also added to the financial inclusion, because with more and more younger population joining into the workforce, people are increasingly depending on these digital channels. Today, if you see, every bank is offering a digitally enabled savings account, and that has actually helped people to open account from remotely. Obviously, it has to be followed by a physical KYC process, which needs to be done. But however, some of these developments has taken the financial inclusion a long way, and obviously we have some more work to do in terms of making it more inclusive.
So, financial inclusion, of course, is a very laudable move, and it is, very good to have more sections of the society coming in. But how profitable is it? Is it really adding? How much value does it add to a bank? Mr. Vasudevan, what's your view on this?
See, if you look at financial inclusion from the lending side, giving a loan to a person who has been excluded from the banking sector, since independence. It's a great boon to them, without doubt, because in the absence of that, there are two issues. Not only the usurious rates that they may be borrowing from the money lenders, more important than that is the fact that they won't be actually able to draw a large amount of money as a loan, because the repayment is always very short term with the money lenders. It's typically, a few months. And so the amount of money you can borrow is not very high, and you can't do much with that kind of borrowing. So the benefit to the clients from a lending perspective is very high from an inclusion perspective, because for the first time, suddenly they are able to draw a fairly large amount of money, and then they can use it for a very productive purpose, very planned and very productive purpose, which can be a significant impact in their life, lifestyle. And for the bank, we just price it in from the bank's perspective, because we do know that giving, for example, in Equitas, if I remove my microfinance, which is 20% of my book, the balance 80% of my loan book, the average ticket size is 4 lakh rupees per client. So that is my average loan size. I'm removing microfinance. If I add microfinance, it will become even smaller. And you can imagine that if I have to start giving 4 lakh rupee loans, the amount of time and money that I have to spend compared to if I give a 1 crore loan per customer, the cost of operation is going to be very high, and the collection machinery that you need to have has to be very strong, which means again an added cost. So you just got to price for it. There's no other choice. But I think the governments, regulators, and the markets, I think they all begin to understand that, there used to be a long time back situation where people used to mandate that, small loans to, the marginalized people should be capped at a very low interest rate. But that just meant that the money never flowed to that segment at all. And today, I think people are realizing that, and, we have a very supportive mechanism from the regulators' perspective also. So we just price it in. And when I say we price it in, obviously, there is some level of competition there. So it is not that you can do what you like, but you still have to manage to ensure that you recover your operating costs so that you can continue to sustainably keep lending. Otherwise, you stop after 1 year, 2 years, you stop lending. It's not going to benefit anybody. So I think it's quite quite profitable for the bank and extremely useful for the borrower.
Okay. You made an important point about people going to money lenders, and there is something I would love to understand, that banks offer such good terms. It is systematic, it is ethical, and yet money lenders exist, they survive, and they thrive. Mr. Chugh, tell us, how come these money lenders exist and keep getting people when all of you are offering such better terms?
See, money lending is probably the oldest profession in the world, since ancient times. So I don't think we can wish that away and think that we will never have money lenders. We are also lenders. We don't call ourselves money lenders, but we are lenders. Now, we are only talking about moving from the unorganized to the organized. But really speaking, the differences are, there are quite a few that we must acknowledge and therefore try and bridge that gap as to why people should continue going to the money lender. The first obviously is the ease of access. The money lenders are always in very, very close proximity. The bank branch or the BC point or other way accessing the financial services, especially credit, may or may not be as easy as compared to just walking across to a money lender. The second thing is that these have been there for a very long time, much longer than what the banks in that locality or that area might have existed, and banks might have just come out there. The third thing is obviously about the awareness that whether it is a responsible way of borrowing and a responsible way of lending. And I think that awareness has got created over the last few years, and we are substantially, we've substantially improved on that. And the last one really is technology, right? Because the way that we are able to use technology and yet solve for the problem of access and transparency, ethics, etc., I think is far more pronounced when customers deal with the formal sector. So if you look at the small finance point model or even the MFI model, all of us spend a substantial amount of resources on creating user awareness, in educating them, in actually building financial literacy, in trying to explain to people that why it is best for them to deal with a formal lending institution and not with the informal, because people have now started to accept the fact that yes, there is a credit bureau score, there is a reason why they need to behave responsibly when they're repaying their loans. So all of that is setting in now, and I think it's probably not in the foreseeable future that we will wish away the money lenders, but as and when the acknowledgement and the acceptance comes from the user group, which is the excluded lot of borrowers that we deal with, gradually it is bound to happen. It might take maybe a few more decades, but I think eventually it is going to happen for sure.
Okay. How are banks in other countries faring in financial inclusion, Alicia? And what technology is helping them? Is there such a technology which can be applied to India also, or do you think India is fine in the technology for inclusion?
If we extend the inclusion piece to just look at sustainable finance more broadly, there are obviously various factors that are being considered. Even credit risk modeling was mentioned earlier as well. Looking at factors around more than just how loans are being collateralized and fulfilled, but also looking at the breadth of the life cycle of a customer more holistically. So I think, again, coming back to my earlier point around data and analytics, having a portfolio view and position view is really, really important. Having bankers and relationship managers that are trained up on financial literacy, responsible lending, all of these frameworks in place, having the right controls and foundational frameworks is really how I'm seeing banks around the world level set around these new topics and agendas and be able to extend their business into new areas. And foundationally, if we look at critically across data analytics, there is a lot to digest as an average banker. Around the world, any new banker at a bank can take up to 12 months to be competent in terms of the knowledge that they need around policies, around credit, around, whether it's agribusiness banking or various sectors. So if we can speed that up using technology, digital workflows, a single pane of glass and source of truth, we've got a better picture that's a little bit more real time to start driving the business. So as much as there's great emerging technology out there, sometimes it's coming back to basics and getting the foundations set as well from an operational standpoint.
Okay. Mr. Mahabaleshwar, what has been your experience in extending financial inclusion, and what's your assessment of how well has India done so far, and what more needs to be done?
Correct. I have been very patiently hearing what Madam Elisha was elaborating on the financial inclusion, as well as her view on the customized and personalized service, as well as strategic decision making. In fact, Mr. Venkatramu has highlighted on the JAM platform, and Mr. Nitin, he answered your money lender versus organized sector issue. But for me, one thing is very common in all these things. Solution lies in technology adoption. That is the that should be the main takeaway for all of us. Because I look at the technology as an efficiency enhancer, whether it is formal banking or bringing the most disadvantaged social sector to the banking network, especially in the form of the financial inclusion through the BC model or micro ATMs, whatever it may be. So the technology is going to provide us the last mile connection. So that should never be forgotten. Why we should all focus on this particular technology-related banking is, you may be aware of the fact that the very definition of banking itself nowadays it is getting changed. A technology company with a banking license. So this is what we have been hearing, and this has become a fact also now. You look at any area, whether it is financial sector, financial inclusion, credit delivery, liability servicing, or customer onboarding. What we are seeing today is an end-to-end banking solutions in all facets of banking. In fact, DCOEs, that is the Digital Center of Excellences, they have become the new norm for each and every bank. So also the technology-related solution, because these DCOEs, they are acting as incubation centers for new tech ideas. However, one thing is very sure, unimaginable changes in the financial inclusion, in our banking, everything is going to happen, but it is definitely driven by the technology. So we cannot forget the importance of the startups as well as the fintechs. As a banker, I cannot claim that I will be doing all these things on my own. So we have to adopt that cooperative and collaborative approach, because there is a role for each and every players who would support us in making the banking more exciting going forward. But Mr. Wax, these things come with more challenges also. When we are highlighting about the advantages and all, we should never forget about the challenges that the technology brings in, or the future banking throwing up certain challenges. Mainly, banks' ability to keep pace with the changes. That is the most important thing is. And we all know that in the banking sector, the average age of the employee is around 35 to 40. So the other biggest challenge is unlearning and relearning of banking. That is, I think all of us are facing. And even if any bank starts with a new slate, they would also have this problem of experience. But more banks which are time tested, they have this problem of learning and relearning. But on top of it, cybersecurity related challenges. So if we think we have almost established and made our system foolproof, that is not so. because every day, every minute, so one or the other person would try to hack your system. That is the reality. 24/7 awareness, and all these things are more challenges are there. But one thing which all of us definitely would agree is that challenges will be there. It will be more exciting, more rewarding, and more banking. See, now what we are all telling about is because of all these technology-driven things, banking habits have improved like anything. In almost all banks now, the technology, through the technology platform, around 80 to 90% of their transactions are happening. So as you have rightly pointed out, it makes very heartening to see the QR codes being used by the street vendors. If you look at the PM Swanidhi scheme, wherein we have lent to a good number of street vendors, nowadays you can see the QR code displayed in all those street vendors, these cards. And that is how we have to, if we are able to give the technology to the hands of the common people, that will be the greatest revolution, change that we can aspire for our respective banks.
Yeah.
So that is why I said it would be more challenging and more rewarding also.
It is indeed challenging, and you're absolutely right in, cybercrime being a serious risk. All of us keep getting messages from our banks that don't share your OTP with anybody, be careful of this. And yesterday I was looking at the ESF Small Finance Bank's website, and the first thing I saw was a window saying beware of fraudsters, online fraudsters. Mr. Paul Thomas, what's been your experience? Have you experienced a lot of such problems?
We don't have faced a lot of problems on that side because 85% of our customers are in the low income, from the low income background, MFI, micro loan customers. So we still follow this very strong financial inclusion focused bank. So when Vasudevan said his average loan size, if you remove the micro loans, it is 4 lakhs. So my book is 85% is micro loans, and the average loan size is 30,000. So the biggest challenge is and we are providing a doorstep service. So only because of that, the accessibility because accessibility plays an important role in serving the last mile customers. So the cost is one important aspect. The second aspect of the challenge maybe in financial inclusion is the financial literacy, financial capability part. So, but no agency has not invested on that. Maybe small finance banks and microfinance institutions are on a regular basis doing with the support of NABARD and all, certain funds are available. So that is a continuous efforts need to be done by all banks to build a financial capability of the last mile customer. That is very important. And another aspect, only on financial inclusion, only lending is makes money, or so all other services, maybe pension or saving service, insurance. All these financial services are required for a total financial inclusion perspective. But unfortunately, all these, it's very difficult to make meet your cost from all these services, providing all these services on a doorstep basis. So these are all the challenges, but we have come a long way in financial inclusion in India. Today, more than 70% of the Indian women have bank accounts. That is a great achievement, actually. So one attributed by the MFIs and the NGOs and all small banks have also contributed to that. So that's a great achievement. But the next phase technology will definitely play an important role in accelerating the financial inclusion space in our country. But it needs, again, I emphasize that it needs digital education, financial capability building. That is very important.
Okay, it's fascinating. You said the average size of your lending is 30,000 rupees to many people. I'm keen to know, how are these people, how financially disciplined are they when it comes to returning, or do you have a series of small NPAs? How do they compare with the big lenders, big borrowers?
Yeah. You mean?
Yeah.
Okay, so that is, I've been into this business for the last 25 years. So I've seen multiple cycles of ups and downs and event-based risk involved in that. So compared to other larger loans, these people are there trustworthy. If there is a way, they definitely even. See, we are based in Kerala. So in 2018 and 19, we had faced two major floods, and almost 50% of our assets were in those districts where flood was affected. But I could collect almost 98% of the loans. But we worked with them. We gave them time. We gave them moratorium. All those things. Additional loans were given. So even the last the phase, the first wave, 5 months were more on moratorium, and it was long lockdowns. So, but in the third quarter and fourth quarter, by March, and we were almost back to normal. So we have been maintaining 98, 99% of on-time collections. So that is the advantage.
Okay, that's fascinating that the small borrower is so disciplined. Mr. Venkatramu, what's your experience with small borrowers, financial behavior and discipline?
No, as a payment bank, we are not supposed to lend.
Okay.
But having said that, we are in the process of tying up with some of the vendors for extending these services. So that way, we don't have any vintage per se in terms of these customers in the lending. But what I can say is that in the last few months, we've been doing some collection activity for one of the NBFCs. So largely, I think the customers are willing and coming for making the repayments. So that way, at least in some of these segments and areas, the repayments have been good.
Okay. Now, in the wider issue of NPAs in banks, which is related to what we were just discussing, and that's been a problem that's been dogging the banking sector for years and years. And each time things seem to be getting better. You had the pandemic, and again, people went for restructuring. Mr. Mahabaleshwar, when is there a solution in sight? I mean, today we'll have a very disciplined set of borrowers and well-run banks, and NPAs will become a much smaller percentage of your books.
As long as there is banking, there will be stress and there will be NPA. That we need to understand.
Okay.
Because the very concept of lending is associated with risk. But the differentiator is how strong is your risk management policies, and how strong is your compliance culture, how strong is your underwriting SOPs. So these are the major differentiators.
Okay.
So that being the case, yes, there was increased stress in the economy as well as in the banking books, mainly triggered by COVID-19 pandemic. But all of us are aware that because of the timely intervention of a lot of economic stimulus packages announced by the central government as well as by the regulator in the form of either GECL or restructuring 1.0, restructuring 2.0, and the moratorium benefit extended by the regulator and all. I think banking sector has been able to successfully navigate these turbulence caused by the pandemic. Okay. Now, if you can see that economy is on the path of recovery, because if you look into the GST collection or the e-way bill, it has not gone down by 50% or 60% as feared earlier. Yes, there is a slowdown, no doubt about it. That is quite natural also. But we are on a turnaround mode. So I think going forward, because of these stimulus packages, the customers have also utilized that. And going forward, we should be in a better position to provide further fundamentals, in making further fundamentals stronger going forward.
Okay. Nitin Chugh, coming back to technology. You know, when you look ahead, you see the pace of change accelerating. Do you see new players coming out of nowhere and do to the banks what, say, Tesla might do to Toyota? It's already has a higher market value. There's so many apps, and having real estate experience may not matter so much. So how do you deal with the situation? What's the outlook?
Well, I don't think they'll come out of nowhere, but they're certainly on the scene, and we do expect, keep aside the valuations. Valuations, of course, are driven by many other things, and we are seeing quite a few fintechs and payment companies, the new banks, especially outside India. They do attract far higher valuations as compared to the traditional banks. But leave that for another day on the valuation side. But I think, really speaking, technology is enabling all kinds of new competitors and new ways of banking. So when you look at it from a customer's point of view, it's a very good situation to be in, because you have more options and you have an evolved customer who's probably a little ahead in their digital literacy, and therefore they are able to appreciate all of those new things. From technology point of view, it is universally available. There are no banks who manufacture technology, but technology is manufactured by technology companies and it is used by banks. And some banks use it early, some banks use it later, but eventually everybody ends up using the same technology. The third set of things is, of course, the regulations. The regulations are far more enabling now across the world. And even in India, we are very progressively moving in that direction, that we are encouraging alternate ways and many other ways for consumers to make a choice as to how they want to deal with their banks or entities. So I think this is really the whole new world which is taking shape, and we must acknowledge that. And that is why I made that point earlier on about the collaborative ecosystem, because even the new people on the scene will need to work with somebody. Even some of us are already working with either fintechs or any other kinds of payment banks or whatever else. So I think now is a time where you actually move together collectively, making use of what is available universally as technology and the whole thesis of customer experience, and delivered in a manner which is far more homogeneous. Otherwise, what has happened in the past is that technology has benefited a very small section of any society across the world, and most of the other part of the societies actually get excluded. But now with this whole new wave of many people, many intermediaries, I think this is only going to help us move forward in a far more homogeneous manner.
Okay. Mr. Vasudevan, your thoughts on technology? How much of a threat is it for the established players?
Yeah, I think technology is something where you better say that it is going to be all overpowering and all that. It's you will be kind of an odd man out if you say that technology is not going to disrupt you, whatever business you are in today. It doesn't matter where. So clearly, yes, technology is something that is going to come in heavy tranches all over the place. And banks can either choose to try to see how they will defend themselves against this onslaught by technology firms, or they can say that why can't I be part of the disruption team and be the one which will disrupt others. So that is a choice that each bank can take. And being a newer bank, being a smaller bank, obviously people like us are much better positioned to take that kind of view, saying that why can't we be part of the disruption rather than getting disrupted. And that's where in Equitas clearly we have taken that view, and we have rolled out a few digital services which is really seeing a lot of customer traction. And we are also open to working with fintechs, but on clearly our terms. We have no desire to become the back office for the fintech world, where the customer ownership has to be with us. We have no desire to partner with a fintech where the customer ownership will be held by the fintech, and we only provide a back-end reconciliation and transaction services. We may as well not do it. I mean, I will close down and go home rather than be a back office for someone else. So clearly, customer relationship and customer ownership is what will have to drive our fintech relationship. And so we are choosy, and we are careful in what we do in that space. And we have been able to strike a few good partnerships, which has really worked very well, I would say, for all stakeholders concerned. So I think technology, there's no doubt that it is going to be playing a more and more larger and larger role. I think that's very clear to all of us. But I think the whole challenge will be that we should see technology as a tool, as a power or as a weapon to go out and take on bigger competitors than us, and that's the way we look at it from our side.
Okay, so it is quite challenging, and I think one needs a lot of innovation to survive and thrive. Edisha, what do you think are the next gen innovations in this disruptive period?
Absolutely. And look, being in certainly from the Chief Innovation Office, I've been focused on banking within ServiceNow just the last 2 years, but previously consulting to a number of banks. I've seen a lot of really sophisticated predictive analytics, optical character recognition, smart software that can understand documents, detect natural language processing for areas like fraud detection, looking at fraud types and trends across the board. Everything from decisioning engines to recommendation engines. So there's a lot of technology out there, but it's how you can tie it back to your strategy and ensuring that all of the IT and operational, either workflows and infrastructure and critical services that sit behind all of that are robust. And then when it comes to risk taking, banks are in the business of undertaking risk at every step of the way across, financial risk, credit risk, and operational and IT risk. So being able to use technologies that automate a lot of that back-end administrative burden is really where then we talk about innovation, where the banks can focus on and the relationship managers can focus on strategy, focusing on their customers, mapping out the future roadmaps for their customers, as opposed to being worrying about due diligence and quality assurance type processes. So we can automate all of that. We can digitize some of those workflows and really help in that area. So I'm seeing where 80% of the work's being done in the middle and back office, lots of automation throughout the world. All of the banks are obviously scaling everything from, cloud technology and software to just bring in more consolidated workflow so that multiple teams can hand off at the right points and get the job done a lot faster. In lending was obviously mentioned today, faster onboarding, being able to turn around, pre-approvals and approvals in a faster way, getting back to customer issues, but also having a track record and on those trends so that the customer doesn't have to explain themselves over and over again. So everything starts and ends with the customer. Yeah, lots of technology being used there. Back to you.
Thank you. That's a very good perspective you've added. And in fact, all the panelists, we've had a great discussion where we learned about, how technology is disruptive, how it is so innovative, what's the way forward. More and more people are getting into the banking system, where we need partnership. And very interestingly, how small borrowers are so good at repaying their loans. It's been a fascinating discussion. I think we've learned a lot from our distinguished panelists. Let me hand it back to Ivan.
Thank you, Himanshu. Well, ladies and gentlemen, that concludes the Banking Roundtable titled Marching into the Next Decade, Complexity and the Arcs of Time in Banking. A big thank you once again to all the members of this roundtable, Elisha Harrington, J. Venkatramu, K. Paul Thomas, M.S. Mahableshwara, Nitin Chugh, and P.N. Vasudevan for taking time off from their very busy schedules and joining us at this roundtable and sharing your insights with us. It was wonderful to have you, Himanshu. You did a fantastic job of moderating this panel. Thank you so much. It was great to listen and learn from these bright minds and influential leaders and hear them talk about transforming organizations in the banking sector to achieve resilience, authenticity, and help one reach the stage of customer delight. I am sure we are leaving with some very important takeaways. Thank you for joining us. Stay safe. Have a good day.